Okay, let's get started. Thank you very much, Iqbal. Looking forward to hear more. Thank you.
Guys, I can't speak over everybody moving around and shouting, so can I have a little bit of silence? My wife said to me this morning, where am I going? And I said, I'm just going to do a quick presentation at some crypto investor show. And then I arrived outside and saw a queue of thousands of people. I have to say, slightly unprepared for this kind of amazing turnout at a crypto investor show. So thank you and welcome. I'd like to start my presentations with a question and or a few questions. So hands up, how many people in the audience own a cryptocurrency? Keep your hands up if you bought the first one in 2017. Keep your hands up if you paid tax. So I'm going to ask this question in 12 months from now, and I'm going to see if there's a change in mindset. Oh, is anybody here from the regulator or HMRC? Too late. So I just want to spend the next 25 or 30 minutes taking a random walk or a scenic walk through the world of crypto, and hopefully try to address the question, are we in a bubble? Before I do, just a couple of slides on what eToro is and what we're all about. We were founded in 2007. We've been in operation for over 10 years. We have 9 million, I believe it's actually 10 million users as of today. We operate in 140 countries, and we have retail offices in 6 countries, websites in 7 different languages. We employ over 500 people. In 2014, we added Bitcoin to our platform. In 2017, we actively started to market Bitcoin on our platform. Today, we're the largest retailer of cryptos across Europe and probably in the top 3 globally. This is the first time I've actually announced that to such a large group of individuals. We carry 9 cryptocurrencies, and just to remove any doubt or confusion, they are not derivatives and they are not CFDs. When you come onto our platform, you actually own the cryptocurrency. There are 3 ways to use our platform. The first one is manual. So you come onto our platform, you send us some money, and you buy NEO or Stellar or Bitcoin. The second method is copy. So if you'd like to take advantage of the volatility of the market, and if, like me, you have no idea what technical analysis is, or haven't got a clue whether Bitcoin's going to go up or down, you can copy some of the best traders who are trading cryptocurrencies. So it's kind of like bot trading, but with a human. You find somebody you like, you talk to them, and you can simply say, right, you're trading Bitcoin, you're trading cryptocurrencies, so I'm going to copy all of your trades. The third method is a portfolio, diversification. So you can come onto our platform and invest in a portfolio which is weighted by market cap, and it carries 6 of the largest cryptocurrencies. I say largest, I say that loosely, because they keep changing on a daily basis. So that's all on eToro. Now the bubble. I keep reading in the press that we're in a bubble, or are we in a bubble? And I'm hopefully going to try to address that question in the next 20, 25 minutes. In order to address that, we have to look at the crypto ecosystem. For me, there are 4 pillars of the ecosystem. The first one, the technology, the blockchain, whatever else you want to call it. The second being the investors. Who are they? What do they look like? Some of the people in the audience here. The third, the regulators. Are there any regulators here today? No? Good. Now, free to speak, free to say what I'd like to say. And the fourth are the consumers, who are actually using cryptocurrencies. So let me start with the technology. Before I start, I'm going to apologize to the purists in the audience. I've really, really simplified what the blockchain is. I was speaking to a member of parliament a few days ago, and he asked me to explain what the blockchain was. And I had to make it really, really simple. So I've taken a lot of liberties here. So if there are any technologists in the audience, happy to have a conversation offline. But this is the best explanation I could come up with. So blockchains. What are blockchains in their simplest format? They're a store of information. They're a store of data. They do nothing more than that. I've got Stefan sitting over here somewhere. He's probably going to argue with me. But they, in simplest terms, they are a store of data. They're supposed to be immutable. So you can't edit, they're append only. You can't edit, you can't delete. Second part, we need a mechanism to verify the entries into this store of data. And this needs to be largely automated. And the third is they're supposed to be decentralized. So not one individual owns all the data. The problem with that is each one of these key criteria gives us a problem of scalability. So if we have something which is immutable, which we can't delete, if we keep adding data to it, eventually it's going to get too big. If we have millions and millions of transactions which we need to automatically verify as entry points into the data store, again, scalability issues. The third is decentralization. If we have a large store of information, how do we send or create copies of this around the world? Again, scalable problems. So what makes the blockchain is also what limits us. So what's happened over the past 10 years, there's been an evolution of blockchains, which is why we keep reading about all these different cryptocurrencies. I'm not talking about the ICOs here. I'm actually talking about the actual basic, what I call fabric level blockchains. This is a table which was being adapted from a white paper. So if we have a look at the Bitcoin blockchain, remove the currency element of it, just the Bitcoin blockchain, they came up with a very, very simple mechanism to validate or verify transactions. The theory was, if you have to expend a certain amount of energy, which costs you, you are less likely to lie. You are less likely to falsify the data being entered onto the blockchain, hence the proof of work. Then Ethereum took a look at the Bitcoin blockchain and said, great idea, but we only have one use case, which is the cryptocurrency. Wouldn't it be great if we could actually have a myriad of use cases? If we could have a social network running on a blockchain, if we could have a casino running on a blockchain, maybe even have a bank running on a blockchain. In order to do that, we needed to make the blockchain programmable, hence smart contracts. So Ethereum added a layer of smart contracts. So the blockchain went from generation 1 to generation 2. At that point, somebody thought, okay, if we're going to have all these transactions and we're going to have blockchains on top of blockchains, or should I say dApps on top of blockchains, we may hit another scalability problem. So we need to move away from proof of work to something known as proof of stake. The easiest way that I can explain this is shareholder voting. So if you own tokens, or if you own the coins, or whatever terminology you'd like to use, you have a right to vote on the data which is being entered into the blockchain, amongst other things. Hence, proof of stake. The more tokens you stake, the more voting rights you get, in a very, very simplistic manner. The problem with that is minority shareholders. People like me, who don't have much money, who can't afford to buy Ethereum anymore, we don't get many voting rights because I don't own that much Ethereum. So then BitShares came along and they said, what if we had delegated proof of stake? So I could pool together my voting rights with others in the audience and we could delegate them to somebody and said, well, you vote on our behalf. So minority shareholders can now have voting rights on what is good data, what is bad data, how do we fork, what should we do in terms of development, et cetera, et cetera. In addition to that, BitShares had a look and said, do we need one blockchain? The way I look at blockchains is like a tree. Do we need just the central trunk, or is there a way of scaling this by adding other blockchains, i.e. adding branches to the main blockchain or side chains? EOS then took this a little bit further and said, great, let's add a layer of programming on top of it, and let's add smart contracts. So then the blockchain evolved again. Polkadot, I won't say much about. I've been to one presentation with Dr. Gavin Woods, and it went way over my head. So if there's anyone in the audience who can explain Polkadot to me, please do. But again, Generation 4 and the Ton Network Generation 5 blockchains. They've now taken the simple concept of delegated proof of stake and said, okay, but how do we know all the delegates are trustworthy? Maybe we need to add a level of fault tolerance to the way they are saying that this transaction is valid or this block is valid. So they've come up with proof of stake and Byzantine fault tolerance. They've added multiple chains. So the open network, or Telegram's open network, is a main chain with side chains, and then side chains off those side chains, and then the blocks themselves are also chains. Long story short, there's a lot of chains rather than just the one Bitcoin blockchain which we started off with. They've also added sharding so that rather than one processor having to process all the transactions, you've got multiple. You've got transactions being processed in parallel. Again, the key takeaway from this slide is the blockchains are evolving over the past 10 years, and the evolution in the past 12 months has accelerated. And only yesterday I met another company which is launching another blockchain because they feel they can solve another scalability problem or a payment problem. So when you're looking at all of these white papers and saying, where are we in this entire scheme or scenario of Bitcoin, or should I say blockchains, ask yourselves what problem they're actually solving. Is it the storage problem? Is it the consensus problem? Is it the decentralization problem? Is it a payment problem? And that way it'll help you categorize when you're thinking of investing in different cryptocurrencies stroke blockchains. So as the conversation with this MP evolved, he said, okay, I get that. I realize the blockchains are moving forward. But is there an easier way of classifying them? So if somebody mentions the name of a blockchain, can I ask them 3 or 4 questions and say, well, okay, where do you fit into this jigsaw puzzle? A number of taxonomies have been developed to classify blockchains. I haven't seen one which ticks all the boxes. Even this one doesn't tick all the boxes, but I like this one because I understand it. So in short, what does this say is, if somebody says to you, I'm a blockchain, you ask, am I public? Can everybody see me? Or am I private? Am I the internet or am I the intranet? So that's the top half are public blockchains and the bottom half are private blockchains. And then they're divided left and right. So the left is permissionless. Do I need permission to read, to write to the blockchain or not? So if we have a look in the top left-hand corner, that's pretty much Bitcoin. It's a public blockchain. Everybody can read to it. Everybody can write to it. So it's pretty much permissionless. If you look in the top right-hand corner, that will be something like Ethereum after proof of stake. So that is public, but you need some sort of permission to write to it, i.e. a proof of stake. Bottom left-hand is permissionless private. So this is a blockchain which is probably owned by a bank, but they want to give individuals the right to read from it. So it's permissionless, so you can read, etc., but they want to have some element of control. The permissioned private blockchains, so imagine a consortium of banks where they want to keep all the information amongst all the members. They want to only give them read permission and write permission. So those are the most restrictive, the permissioned private blockchains. So again, when you read these white papers, you come across the names, you have to ask yourself, where do they fit into this entire jigsaw puzzle? Which one am I keen on investing in? Or should I diversify across all different types of blockchains? Similarly to the internet, do I want to invest in applications which are going to be used by just corporates? Or do I want to invest in an application which is going to be used by everyone? There's money in both. But you need to take the decision and classify them and then say, do I diversify across the different types of blockchains? So who are the people investing in these blockchains, cryptocurrencies, ICOs, or whatever terminology you want to give to them? So we did a survey of 2,000 people across the UK. And more people know the word Bitcoin, obviously, than blockchain. More people know about Bitcoin rather than Ethereum. More people know about Bitcoin rather than cryptocurrency. The interesting thing is, the individuals who know about Bitcoin, only approximately 6% of them have actually purchased a cryptocurrency. So when I read about bubbles in the press, these bubbles are related to awareness of cryptocurrencies, not investment in cryptocurrencies. The entire world hasn't gone crazy and invested in cryptocurrencies. Sure, my corner shop owner understands, well, has heard of Bitcoin, but he hasn't invested in Bitcoin. Are we in a bubble? No. Do you think government should regulate cryptocurrencies? Surprisingly, a lot of people either said yes or they're unsure. And again, this is interesting because if you survey an audience of the purists, the maximalists, the individuals who are coding crypto and who started off in the world of crypto 5, 6, 7 years ago, that would definitely read no. But the individuals who are investing now and the individuals who are the consumers, the mass market, they're okay with regulation, or they're still undecided. So how are they involved? So this is the customer segments from eToro over the past 2017. So in January 2017, we had what we would call the Shoreditch hipster crowd. The guys who were coding were in development in one way, shape, or form. They were aged between 18 to 35. I thought that said homeless then. No, it said home sharers. I was worried for a moment. So they're the ones who are actually developing cryptos, but they understood blockchain, they understood code. In Q2, this moved to individuals who were using IT. So not necessarily the developers, they may be in security, they may be in networks, they may be system engineers, et cetera, et cetera. In Q3, they evolved again. What we had here were the early adopters of IT. So the ones who probably use a digital bank, the ones who probably use a robo-advisor, the ones who are looking at their finances on their mobile phone. So that was Q3. Q4 was an interesting one. We saw a leap. We crossed the chasm very, very quickly. And in Q4, it was the mainstream. It's a majority of people sitting in this audience who were comfortable in life, looked at Bitcoin, had heard about Bitcoin, and didn't want to be the person around the turkey at Christmas saying, well, I don't own Bitcoin. That's what Q4 was. But again, the interesting thing here was people went from really understanding Bitcoin to not caring what Bitcoin was, but they just wanted to invest in it. So the educational phase of cryptocurrencies was completely bypassed. I believe that educational phase will return to it in 2018, but it's really strange because usually you go from people who know about it to people who try to understand it and then invest. That understanding part just went out the window. So if you have a look, and this describes it perfectly here, this slide, in Q2, people were searching for Ethereum USD pairs. There aren't many people. I know for a fact my wife will never search for an Ethereum USD pair. She doesn't even know what it is. And then they were adding the X to the end of it because they were looking for exchanges which were selling the Ethereum USD pairs. They were searching for Bitcoin USD pairs. In Q4, they searched for Ethereum price. It's just interesting buying. Is it moving up? They searched for wallets, and they wanted to know where to buy Bitcoin from. But nowhere did they actually stop to say, what's the blockchain? What is Bitcoin? We weren't interested. So we crossed the chasm very, very quickly. What are they buying on eToro? XRP. I'd love to know why, but yes, they're buying XRP. Bitcoin, Ethereum, the usual suspects. Neo and Stellar is low right now because we only added it about 4 weeks ago, 3 to 4 weeks ago. So this hasn't been weighted by time. Dash, as you can see, Litecoin is far more popular than Dash. Individuals seem to be buying things which they think are cheap. And what we're trying to say is it's better if you actually understand the underlying technology and know what you're investing in. Don't invest in Facebook because you feel it's cheap. Invest in Facebook because you understand they're trying to build a global social network. So don't invest in something which costs 30, 40 cents just because you think it's going to hit the same price as Bitcoin. You need to understand a little bit more about the technology. Where are they buying it? Yes, we're very heavily London-centric, as you can see. But Manchester, Birmingham, the usual suspects, Liverpool, Bristol, Brighton, Cambridge, Leicester, Leeds. Again, the usual suspects. But as you can see, there's a huge market here in the southwest. The people who invest in portfolios, the individuals who have larger amounts of investment are not yet investing. If I was to extend this by another 2 or 3 quarters, it would read institutional investors. They are all waiting on the sidelines to invest in cryptocurrencies, but there's no easy way of investing $1 billion in cryptocurrencies today. So just some resources. I'm sure you're all aware of these. Some of these are now clickbait, so they were really good. My favorite resource is actually Crypto Miso, or Miso. The reason it's my favorite resource is it ranks ICOs and cryptocurrencies based on developer contributions to GitHub. So if you're interested to know how many developers are working on a particular project, how quickly they're updating a particular project, you go there and they sort everything out, how many contributions, when they contributed. So basically how active a project is it still being worked upon? I like some of the musings of Jimmy Song. Some people may disagree, but I find him very entertaining. I'm not saying you should just go and read Medium for Vitalik, but Medium is a great resource for cryptocurrencies. Crypto Compare, one of the sponsors of this show, again, a great forums if you want to go and talk to people about crypto. I will promote eToro. We have probably one of the largest communities of crypto traders who want to discuss technical analysis. So if you join, and even if you don't invest, feel free to go and have a conversation with these guys on our feed. The regulator, the fun part. So regulation is a really interesting thing, and I apologize if this slide is out of date. It changes on a daily basis. I wake up every morning and somebody messages me and says, do you know what's happening in Korea? And I'm like, what's changed now? So it's very, very difficult. I've tried to work out a method of creating a dynamic slide. I haven't worked it out, so if anybody knows how to update this dynamically, do let me know. So China's an interesting one. So they said, let's see if we can make an orderly exit of miners out of the country. I don't know what an orderly exit means, but I have visions of miners marching out of the country. They said ICOs are legal and disruptive. I personally believe that China will not ban cryptocurrencies. I do not believe any country will ban cryptocurrencies. There's too much innovation. There's too much money in it, right? They will not ban it. They will try to regulate it. So I think China, if they can somehow protect the RMB, they will promote cryptocurrencies. I do believe, it's a rumor, I shouldn't say rumors on stage, but China has a digital cryptocurrency which they're bringing out. I won't mention the name, you guys can Google it. The USA, they're saying, look, if your ICO is a security, it should be taxed like a security. If it looks like a security, we're going to think it's a security. They're being, again, pretty fair. They're saying, we're not going to clamp down on it. We're happy to support it, but don't try to bypass existing law. South Korea is one of the interesting ones. I think they just look at the weather and they change their mind. So sometimes it's legal, sometimes it's illegal, sometimes it's legal, sometimes it's illegal. I think currently they'd like individuals who are purchasing cryptocurrencies to go through standard and anti-money laundering, i.e. AML, and know your customer KYC regulations. Italy is issuing a decree to classify cryptocurrencies. I still don't know what that means. If there's anybody here from Italy, do let me know what issuing a decree to classify cryptocurrencies means. France, Germany, creating a working group, happy to support consumer use of cryptocurrencies. The Swiss, they just want to become the crypto nation. So they want everybody to go to Switzerland and build cryptocurrencies. At least they're clear on what they're trying to do. Russia, let's not, well, they started off with the banning, then they thought that let's not ban them, and now I think they're looking at regulating them. The UK, so far, has had a really good policy, so they've had a wait and watch policy. They're happy to support innovation and foster innovation here, but they are looking at it from a point of view of how do we control or how do we protect the consumer. So in short, regulation is coming. I personally don't feel it's a bad thing. I feel if we're going to have mass market adoption of cryptocurrencies and blockchains and ICOs, etc., we need support from the regulators. Sure, the libertarians in the audience will disagree with that, but there's no harm in having regulation and then still having decentralized models and trying to bring down governments in the background. Not that I'm condoning that, I just... So there's certain rhetoric. I mean, why do they want to regulate? Everybody keeps saying that cryptos are being used for money laundering, buying drugs and other nefarious activities. We all know drugs existed before cryptocurrencies. We also know that money laundering existed way before that. And some of the banks, I think 2 weeks ago, one of the banks was recently fined for aiding money laundering. We know that. So I'm really bored and tired of this same rhetoric being rolled out again and again and again. Are cryptocurrencies being used for this? Yes. I'm not going to sit here and say they're not. But so is the money in your pocket. So is the cash that you use today. So let's not just blame cryptocurrencies for all the woes of the financial world. Let's have a kind of an adult conversation with the regulators, with the industry, and say, well, let's move past this conversation and let's see what good cryptocurrencies can actually do. I won't go into the second thing. We all know you can trace transactions on the blockchain. If an individual wanted to use it for illegal purposes, the question I would ask is, do you really want to store that information of that transaction for all eternity on a blockchain for everybody to see? Probably not a good idea. So what I think is a good idea is to start with regulation on what I call the on and off ramps. So when somebody is buying a cryptocurrency using the money in their pocket, take them through an anti-money laundering process so we know the source of funds. Take them through the KYC process so we know that the customer is fit and proper to invest in cryptocurrencies. And vice versa, if they want to go and buy something and you don't know who they are, identify the user. I think as a starting point, it's fantastic, but I don't believe it's the end point. I think you need to combine existing regulation with the technology behind the blockchain and build something really, really cool, which may actually solve the problems, not of cryptocurrencies, but the problems we have with cash today. That's where I think the future needs to go. Some of the regulation resources, the Japanese Blockchain Association, Crypto Valley in Switzerland, the Germans, I'm not going to pronounce the second word, but Blockchain Bundesverband, I hope I've pronounced that correct. Australia, the Global Blockchain Forum, Nordic Association, and some of the regulators, European Central Bank, Bank of England, SEC, and the Financial Conduct Authority. The last but not least, Crypto UK. It's an association set up by some of the leading companies in crypto in the UK. It went live about 2 weeks ago. Our remit is pretty simple. We've developed a self-regulatory code of conduct. Any member has to follow AML and KYC processes. We've also all agreed that any cryptocurrencies that we store on behalf of consumers, 90% of them will be in cold storage to help secure customer funds. We're also working with stakeholders and regulators in the industry to see if we can actually come together across the table, and rather than just saying, hey, it's all about fraud and it's illegal and this, that, the other, have an adult conversation and say, how do we foster innovation? How do we make the UK a center for cryptocurrencies, rather than it being in Switzerland or Liechtenstein or some other far-flung country? Consumer, one slide left. Only 6 bullet points. It's not because I got tired of creating PowerPoint slides, but I think this is the last piece in the jigsaw and it's the least developed. There's a few places where we can use cryptocurrencies today. I believe you can still use it on overstock.com. Any store created with Shopify, Magento, or WordPress, an e-commerce store, I believe there are now plugins which allow you to accept cryptocurrencies on your e-commerce store. So I would say anybody running e-commerce, give it a go. People may come and spend cryptocurrencies on your store. You can buy a house in Ireland, I believe, and you can buy apartments in Dubai. You can pay for consultants, you can pay for advertising, but we all know the use cases are not really out there for mass market adoption, and I think that's something where we really need to kind of foster and aid innovation if cryptocurrencies to succeed. I lied, there was one more slide. This is the last slide. So are cryptocurrencies in a bubble? I'm going to say no. And the reason is this. If we have a look at the ecosystem, I started the presentation saying there's 4 pillars of the ecosystem. The technology has been developed since about 2008, 2009. Investors came in around 2017. I mean, they'd be investing early days, but around 2017. Regulators started having a look at this in summer of 2017. Consumers, I don't think we're there yet, 2018, 2019. But if we can get all 4 of these to work in tandem and not have one of them out of sync, I believe the technology was slightly out of sync. If investment hits $1 million, if the price of Bitcoin hits $1 million in 2018, that will be out of sync. So if they can all grow in tandem, then we'll have a really, really good ecosystem. If we have a really good ecosystem, I don't believe we can have a bubble, because bubbles, I don't believe, like successful ecosystems. Thank you, guys.
I think you've got to do it.